Hi everyone, my name is Mary Redmond. I'm talking about the Australian dollar, US dollar here. So this is an interesting pair because right now it's clinging to its 50-day moving average, which is around 105.297, and it's moving slightly lower than that this morning. It would probably need to make a substantial break and close here, in which case if it did we could see another pretty big drop this week. And it looks like this is also the neckline of what could be a head and shoulders pattern for the Australian dollar. And we also do see that it's formed a big downward channel, which really started around the top at 1.10. So I'd prefer to see a little maybe move up to around 105.90, 106 before shorting again. But this really doesn't look like a very bullish pattern for this week. And of course, the Australian dollar, US dollar is going to respond to the news that's going on from the EU about whether or not Greece is actually going to default. And nobody knows exactly how the finance ministers are going to work this out, but there seem to be conflicting reports, and there's a lot of infighting going on in terms of whether or not they're going to be able to sell assets to raise the money, or whether or not they're going to work something out so that the banks which lent Greece money can just take a loss on it. And until we get a clear signal of a ready plan from the EU, then this uncertainty is probably going to weigh on the market. And the Australian dollar, US dollar moves very closely to the Dow average. And if you take a look at a point and figure chart of the Dow, it made a low pole reversal last week, and this is a bearish pattern, and it indicates that we could have a 5% drop in the Dow average going forward. So it looks like the market's kind of clinging to the 12,378 level. And while we've still got the Fed going into the market and adding liquidity and buying treasuries for the next few weeks, we still might have a level of and a degree of support under the stock market. So it appears what's going on now is a lot of fund managers and institutional money managers are maybe taking a wait and see approach. They don't really know exactly how the market's going to react when the Fed stops putting liquidity in. So we may not see a substantial break below that this week. We may just see a range-bound market. And the other indicators to keep an eye on are, of course, are the VIX and metal prices. And copper, of course, you want to keep an eye on. The copper futures are slightly lower this morning. And there was news actually a couple of weeks ago that hedging activity by copper producers hit a 5-year high. So currently they're hedging about 25% of their production, and that's probably on expectations of slightly lower demand from China in the second half of this year. And the Chinese purchasing managers, HSBC purchasing managers report came in at 51.1. So that's the lowest reading we've had in about 6 months, and that indicates that the Chinese rate hikes are starting to have an effect, and the Chinese growth is slowing. So that's another issue to watch, to keep an eye on copper. And the other precious metals, they haven't really made a big or substantial break lower, but if they did, then that would probably be a harbinger for the Australian dollar to move lower. So we also, when you're trading the Australian dollar, you also want to keep an eye on the VIX and always watch what's happening with the VIX, because when you get these big spikes up out of its normal trading range or its Bollinger Bands, that's an area where you want to take a profit on the shorts probably. And even though we may be going into a period where we're going to have more volatility in the market in the second half of the year, at least for the next couple of weeks, what's probably going to happen again is you get big spikes up in the VIX, and those are areas in which you probably want to buy the Australian dollar. So if we look at what happened last week when we saw a move down in the VIX to 50.5, that correlated to a 107 level, which was a good short level with the Australian dollar. So we can watch and see what happens today, and if the markets really make a big lower move, and if the volatility makes a big spike upward, then it might be a time to take a profit in the Australian dollar. But of course, it's going to respond to the economic reports all over the world, and of course what's going on in the EU, because we're also seeing a slight slowdown in some of the larger countries. So this potentially, the situation in Greece, it has the potential to spread like a virus everywhere, and it seems a very small country, but it could cause a spike up in credit spreads all over the world. So that's something that everybody's going to have to keep an eye on when they're trading this week. But for the moment, I would still tend to short it on an upward move. And since it seems to be that this is an area in which the Australian dollar has a high degree of support, this is an area to pay very close attention to, because a break below here, particularly a close below here, if the stock market would close lower, the Australian dollar can really make a substantial move lower.